Hello and welcome to our May 2017 market snapshot, and the highlights of the recent months for our May report include the fact that dwelling values rose by 0.1% in April 2017, their slowest monthly rate of growth since December 2015. Combined capital city dwelling values increased by only 0.1% in April 2017, with values unchanged over the month in Sydney and falling in Perth and Canberra. Over the first 4 months of 2017, combined capital city dwelling values are 3.6% higher, and Perth and Darwin are the only two cities to have recorded declines. The annual rate of growth was recorded at 11.2% in April 2017, which was the slowest annual rate of growth in 3 months. Across the individual capital cities, the annual change in home values has been recorded at plus 16% in Sydney, plus 15.3% in Melbourne, and only plus 2.1% in Brisbane, 2.2% in Adelaide, and minus 6% in Perth, 13.6%, a real highlight in Hobart, minus 2.3% in Darwin, and plus 8.4% in Canberra. Hobart's annual rate of dwelling value growth is now its highest rate since December 2004. CoreLogic continues to tell us that the settled dwelling sales are trending lower at a national level, but have stabilised recently across a number of capital cities. Over the 12 months to April 2017, it is estimated there were 336,667 houses and 138,551 units sold and settled nationally, with house sales minus 4.6% lower and unit sales minus 8.7% lower over the year. Across the combined capital cities, there were an estimated 199,546 houses and 100,533 units sold over the 12 months to April 2017. House sales are minus 8.1% lower over the year, and unit sales are down 10%. It is important to note the large volume of off-the-plan sales currently means there is a high likelihood unit sales volumes will be revised higher over the coming years. These properties will be entered into the database as their contract date, but will not be available, the information will not be available until they've settled. Dwellings are selling quicker than they were a year ago and experiencing smaller discounts as well. The typical capital city house is currently selling after only 36 days compared to 41 days a year ago, while a typical capital city unit takes 35 days to sell compared to 40 days a year ago. Now, last month, that was a contrary figure that we talked about, how the days on market had gone out a little bit. So that's an interesting stat they come up with only 1 month later. Each of Sydney, Melbourne, Hobart and Canberra are seeing dwellings typically sell in fewer than 40 days. The average level of discount across the capital cities is recorded at only 5.4%. That's off the listing price, and 5.3% down off listing price for units, compared to 6.2% for houses and 5.6% for units 12 months ago. Sydney, Melbourne, Hobart and Canberra are all seeing a typical discount of only 5% off list price. The number of new and total properties advertised for sale is now lower than it was 12 months ago, and over the past 28 days there have been 40,982 new homes listed for sale nationally, and 25,089 of these were listed across the capital cities. New advertised properties for sale is 6.6% lower than it was nationally a year ago, and minus 7.3% for the combined capital cities. There were 229,281 total properties advertised for sale nationally over the past 4 weeks, and 104,636 across the capital cities. Nationally, total stock for sale is down 5.1% lower than a year ago, while down 2.4% for the combined capital cities. Economic data suggests that demand from the investor segment of the housing market may be slowing. The value of new mortgage lending fell in February 2017, driven by a substantial decline in investor borrowing over that month. Housing credit growth picked up in March 2017, with an investor demand continuing to rise. On an annual basis, however, monthly data shows that the investor credit card growth has started to slow. The rate of Population growth at a national level is lower than recent years, but has steadied over recent quarters thanks to the improving net overseas migration. Victoria in particular is seeing a substantially more rapid growth of population growth than all other states and territories. Dwelling approvals rose moderately in February 2017, with house and unit approvals rising. However, overall approvals are substantially lower than their recent peak. The unemployment rate has started edging higher. However, the economy has shed full-time jobs over the past year, with all new jobs created being part-time or casual. The Reserve Bank left official interest rates on hold at 1.5% for May, and overall we've seen strong letting growth as well through our whole distribution area of the 10 offices through the northwest of Melbourne on rental. So we've got ticks on sales, skinny stock levels, rentals going really well with very, very low vacancy factor and minimal loss of rent as we have properties let before they become available. And we're seeing with the pattern of low interest rates prevailing that people still believe in property. So there's a quick snapshot. We thank CoreLogic for all of this information, a very in-depth report on some different topics this month. We look forward to giving you an update early in June 2017 as we approach the middle of the year, and we will have also seen the impact on the government budget coming up over the early part of May on government policy, on maybe interest rates, on negative gearing, on first home buying grant, on release of on Globo land for future subdivision, lots of things that can impact our property market. We'll talk to you again in June. Thank you.